Good morning, everybody. Glad to have you with us this morning. I'm Bryan Fryar again, sales manager at TVFCU. We've got another great topic this morning. We actually have covered this before, but we're going to go in a little bit more detail and kind of go over a few things that we've been running into in the mortgage industry, specifically here at TVFCU in the Chattanooga area in North Georgia. With me today, I have Jessica Parrish. Hey, Jessica, how are you?
Hey, good. How are you?
Doing great, doing great. A little bit of bio about myself, and then I'm going to let Jessica tell a little bit about herself. Again, my name is Bryan Fryar. I'm the sales manager in the mortgage department here at TVFCU. I've been in the mortgage industry going on about 23 years now. Been with TVFCU since 2008, so about 13 years. I think I just had an anniversary here back in June. So love working for the credit union. Love doing mortgage loans, helping our membership out. So I'm going to hand over to Jessica. Jessica, tell everybody a little bit about yourself.
Hey, I'm Jessica Parrish. I cover the North Georgia branches, and I have been at the credit union about 6 years, a little over 6 years now, and I've been in real estate 5 of those. I've lived in the North Georgia area all of my life.
Awesome, awesome. And then I actually call Jessica Miss North Georgia. So she is an expert in North Georgia. However, she does originate mortgage loans not just in North Georgia, but all over Tennessee as well. A lot in Chattanooga area. So she's well versed in our local area and membership. I think you've even done some loans in Florida and Alabama too. So covers the whole area. So, but also very specifically in Georgia. If I ever have a question about Georgia, I just call Jessica. I may call her JP. That is my nickname for her. But you're going to find out Jessica is very knowledgeable. She is excellent at her job, does great job originating loans and helping people purchase homes and refinance. So we're going to get started on a topic. Again, today our topic is pre-qualification, getting pre-qualified to purchase a home or unimproved property, which we do here at TVFC also, unimproved property loans. We've had some challenges, everybody knows in the news. There's a limited inventory on homes and land, unimproved property as well. So a lot of you prospective home buyers may already know this, so you've been looking around. And I always start this out when I talk to people about getting pre-qualified and they're wanting to buy a house. And I know Jessica will agree with me, is you'll want to get pre-qualified first before you even go look at homes. That's
Mhm.
one of your first steps, besides budgeting first, which I think is your first thing you should do,
Yes.
is work on a budget, know what you can afford, what kind of payment is comfortable to you that you'd be able to financially afford, and then getting pre-qualified. So I'm going to turn this over just to Jessica a little bit, and she can tell what a pre-qualification is and what a pre-qualification does and is. So Jessica, if you would just kind of explain in terms what a pre-qualification is.
Yeah, so a pre-qualification is basically we get your basic information, we pull your credit, and we see, based on the information that you tell us, are you pre-qualified to buy the home that you're looking for? A big thing, what I always tell people when we're going through a prequal is know your basic information, know your income, know how much is in your bank accounts at that time, and make sure whatever you tell us up front, you can prove to us. Make sure your income, if you tell us, you make 5,000 a month, make sure that you have pay stubs or documentation to support $5,000 a month. If you tell us you have a certain amount in your bank account, make sure that once you find a home, you still have that money in your account and you can prove to us that is funds that you have available for your purchase.
Yeah, that's very important. That's something we're going to lead into. We're going to talk about documentation because everything that we do in the mortgage world, we have to prove. Whether that is down payment funds, funds to pay for closing costs, whether that's your income, whether you're self-employed or you work for a company, we call it W-2 employee or something like that. And you want to be able to back up what you put on that application. Everything that we put on there, we have to prove. Basically, what Jessica does as an originator, and all originators do, they call them originators or loan officers, is basically they're trying to get you from the beginning of application process or pre-qualification to closing. So that is her job, is to get the documentation, get you set up on the right type of program that you qualify for, rates, payments, et cetera, getting your rate locked and all that. So What I always tell everybody when you're starting this process, of course, is to go ahead and work on a budget. That's the very first thing. That is very, very immediate thing you need to do. You need to look at what debts you have outstanding, what revolving debt, what installment debt. Maybe you might need to pay something off to be able to afford a home that you're looking for. And because we're going to be looking at your debt to income ratio, they call that DTI, debt to income. What that means is your gross income monthly is going to be compared to your monthly outgo. Now that's going to be, it's not going to be utilities or anything like that. It's going to be installment loans, car loans, revolving debt, credit cards, anything like that is going to be counted in that debt to income ratio. So that's something that we do have to watch out for. And you want to work on your budget and make sure that the homes that you're looking at or thinking about, you can afford that. And if you're ready to purchase, also too, credit. I think Jessica would agree on this. Is credit is another thing you want to maybe look and see what your credit might be right now. If you haven't looked at it lately, checking your credit and see how your credit is looking right now. You can get a free copy of your credit report. I think that website is annualcreditreport.com. By law, you're allowed to get one free copy of all 3 credit bureaus. I would highly suggest that everybody go ahead and go to annualcreditreport.com and get a copy of Equifax, TransUnion, and Experian. Look at your credit and see what it looks like. If you have any derogatories, you'll want to see if you can take care of that. Reason being is, it's going to give you a better approval if there aren't any derogatories, and if you have any, you need to work on that and trying to get that taken care of. What derogatories are you seeing right now, Jessica, that some people, the small things they might could take care of to improve their credit?
Yeah, a lot of small things that we see are, medical collections. We see a lot of medical collections, and oftentimes they're very small, and they just don't know they have them on their credit report.
Yeah.
So that's a big one. That's probably what I see the most.
Mm-hmm. And those can be, you contact those debtors and see about getting
Mm-hmm.
those taken care of if you can get them paid. Sometimes I'll look on a credit report and I'll see a $21 collection that the applicant never knew about that's on their credit.
Mm-hmm.
And it does report on your credit report, and it can bring your scores down somewhat. So you'll want to try to clean up anything that's derogatory or negative to work towards getting, like you may have a decent credit score and you can get qualified. But if you have a few negative things you could take care of, it could bring those scores up and improve your credit overall, and you could get a better approval and get a better interest rate. So that's something you may want to work on before even trying to apply. But that's something we'll look at if you do want to get pre-qualified with us. We're going to let you know, hey, you do have this derogatory showing up on your credit. We can pre-qualify you right now. But if you wanted to clean this up and maybe come back in a few months and see how it looks and see if we can get you maybe a better qualification, okay? But that being said, getting pre-qualified, and I'm just going to hand this over to Jessica. Say I've already got my budget. I've been looking in a couple of areas. Let's say I'm looking in the Ringgold area, maybe Fort Oglethorpe, and I like the homes that I see. I have an idea about what I'm want to purchase. I've gone online and I've kind of plugged in the purchase price of the home, what the payment might run me, and I'm feeling pretty comfortable about it, but I need some questions answered and I'm looking back at getting pre-qualified. If you will just kind of walk us through the steps there of what I need to do when I call you.
Okay, so the steps for getting pre-qualified, basically you just give me a call. We will go over the different options that we have because we have a few different loan products, and we will talk about what may be best for you. And then I will send you an email with my application, and you fill it out, and then I will give you a call and we will go through it. We'll go line per line. A lot of people really stress about the application and getting something incorrect on it. Don't worry about that. I'll call you. We will go through it with a fine-tooth comb, and we will make sure that everything on there is correct. We will pull credit, and then at that point I'll be able to tell you which different options you have based on your credit score, your debt to income ratio. We can see what options we have for you from that point. And then we can send you your pre-qualification letter and you can start looking at homes. It's a very easy process. It's not hard at all. And it's pretty quick too.
Yeah, it's most instances, same day, same morning sometimes.
Mm-hmm.
I've in my career experience here at TVFCU, and I know Jessica's done this, and several of my originators, can do it within a matter of an hour, if that,
Hmm.
sometimes. So it's a relatively painless process, especially compared to the home shopping
Hmm.
that you go through. And I do want to mention too that Jessica had said about the pre-qualification letter. That's very important. It always has been. It's even more so important right now, especially with the market being as tight as it is. Those sellers will want to make sure that you're a serious buyer and you have that
Hmm.
letter in hand. So, and your realtor too, if you have, and I do highly recommend, especially these days, having a good local realtor. We work with several local realtors in the area. I know Jessica has several that she works with.
Hmm.
They're professionals. They do a great job. And they are our partners and our friends that we like to use and work with to help people go through this process. And like Jessica was saying too, we try to make it as painless as possible. We do this every day. So, and Jessica does this every day, 5 days a week, sometimes 7 days a week. So,
Yes.
we definitely professionals here, and we want to help you work through this process because it is a complicated process. Buying a home is a big deal, or even buying land. It's a big deal. It's going to be the largest asset in your lifetime.
Hmm.
So I think a lot of people they are intimidated by it, but that is our job to help you go through that process too. So and as Jessica said, that pre-qualification letter, it's on our letterhead. It is signed by Jessica or another originator. We have looked at your credit. We've looked at your loan application, your scenario. You've been pre-qualified for that purchase price, so you can give that to your realtor, and they can make offers, and hopefully. You'll be able to get to sign a contract and we can move forward. So,
Hmm.
Jessica, that being said, I've got my pre-qualification letter. I have talked to my realtor. We've found a home. We've made an offer. We've counter offered. We've got a signed contract that is legal with a counter offer. And what do I need to do now? I've got this contract with me. You've got my pre-qualification application. Where does it go from there?
So once you're under contract, you send that contract over to me. I usually try to ask when I'm doing a pre-qualification, who is your realtor? Who are you working with? That way I can go ahead and make contact with them as well. So that when you are under contract, they can send the contract directly to me. So once we receive your contract, I'll put the information in on your application, and then I'm going to ask for supporting documents. So everything that you have told me on the pre-qualification, this is the time where you're going to tell me, hey, this is all true. I can back it up. So I'll ask for pay stubs, W-2s, bank statements, just very basic information like that. If you're self-employed, we will need tax returns. If you have rental property, we will need tax returns. So that's pretty much, how it will go from there. I will send disclosures. I will get your file ready and we will put it into processing. They will order your title work, they will order your appraisal, and then they will submit it to underwriting so we get that initial decision on the loan.
Yeah. And that's a big deal because sometimes we do get a lot of paperwork up front, and in the mortgage business, that's just the way it is. Everything that you show in that application does have to be backed up with documentation. If you're going to be putting money down, we have to verify those funds. We have to make sure those funds are in your name. Or if you're getting a gift from a relative, there's certain documentation we have to go through, and Jessica can work you through that process. And then something I always tell everybody is when you're working with your originator on your pre-qualification process is go ahead and ask them what documentation you're going to need once you're ready
Mhm.
to go forward with your purchase contract, because you want to have that stuff ready, because I always tell everybody time is of the essence, and your realtor knows
Mhm.
that. They're going to make sure that everybody stays on track for that closing date. And that's another thing that's going to kind of lead me to next is with the industry going like it is right now, mortgage rates are super low. The housing market is tight, but the refinance market is booming right now. It's been booming since COVID hit and rates went down. So what that means is our third-party vendors that we use here at TVFCU and other mortgage companies, banks, credit unions use, like title companies, appraisers, um, those people are very busy these days, very busy. So there's a
Mhm.
lot of backup, I guess you'd say. In our area, we're doing pretty good at TVFCU. We're getting our appraisals back, 2, 3 weeks. Some instances, if it's further out or a complicated appraisal, it might take 4 weeks. So that's very important that you get that purchase contract to us as soon as possible, and supporting documentation, and sign your disclosures, because the clock is ticking. You want to meet that purchase contract date, closing date. The seller definitely wants you to meet that date because they want to sell the home. And I'll be honest with you, they probably have a long line of people waiting if you don't buy that home. So it's very important that you get on the ball, plan for getting the documentation to your originator and signing disclosures. I know a lot of people work, and I hear this a lot, that, we've got someone there, they're very busy with work, and I completely understand that, but do need to prioritize, this process too. We're going to make it as painless as possible. We're going to get your documents. We will try to go get the information if we can from other people. One thing that does come up sometimes when people are looking is homeowners insurance. That's something you're going to need. You want to, when you're talking to Jessica about your pre-qualification, you'll want to go ahead and start talking to your agent about getting homeowners insurance. And I recommend, I always go through, I would go through who I have my car insurance through. A lot of times they can bundle your insurance. So also too, we brought up, and I need to run back to this, getting pre-qualified. TVFCU, since we are a credit union, to do a loan with TVFCU, you do have to be a member. So Jessica, just kind of give everybody a brief overview about what being a member of a credit union is and how they can become a member if they're not already a member.
Yeah, so if you're not already a member at Tennessee Valley, like Bryan said, you will need to become a member. It's a very easy process. We have several different ways. You can apply for membership online. You can go into a branch, or one of the really cool features that we're offering now is the TVFCU live stream. So you can actually go on your phone, your iPad, whatever it may be, and you can virtually open an account and become a member here at the credit union.
Yeah, and you'd speak to someone just like you're speaking to me, or look at me and
Yes,
just face to
it's like,
face.
it's pretty much like you're FaceTiming someone.
Yeah, yeah. And to get that app, you go to the App Store. It's TVFCU live
Yeah.
stream.
Yes,
Highly
TVFCU live stream.
TVFCU live stream, and you can open an account. You can actually even talk to a mortgage lender. That also too. And also you can talk to a consumer lender if you're looking at buying a car or refinancing, something like that. So you can also do things with your account to talk to one of our member services reps to do your account. So everybody do keep that in mind. Live stream is a great tool, great technology, especially with COVID and everything. You don't even have to go into a branch. So highly recommend using that. And do become a member if you're not already a member. I do find that 95% of the time people we talk to already are a member, but we have a lot of people, a lot of folks moving in from out of town that are not members. So do talk to your originator if you are moving in from out of town about becoming a member too. So we have a lot of folks from out of state, California, Texas, Florida, moving to the Chattanooga area. So it's an exciting time for Chattanooga, North Georgia area. So I've already turned in my paperwork to you, Jessica. It's been put in processing. I'm anxiously awaiting, when they're going to do the appraisal. Hey, has my title work come back? Is your underwriter, tell me about what goes on during that process, and explain too, what is a processor? What's a mortgage processor?
Yeah, so during the process, we will have the processor. What they will do is everything that I have submitted to them that you have submitted to me, they will review and make sure that there's nothing else that the underwriter is going to need. They'll look through and make sure we have every single page of your bank statements. And that's also very important. When we ask for documents such as bank statements, we need all pages, even the ones that say they are intentionally left blank. We need them all.
Yeah. Well, I'll give an example on that one, and I've been given this example for years. You get a bank statement, and it says 1 of 3, 2 of 3, and 3 of 3. Page 3 of 3 may be blank, but the underwriter doesn't know that. There could be something on there they need to see. So they're going to ask for that third page. If it says 1 of 3, 2 of 3, and 3, even though it's blank, we still have to have it too. So, and that's just not TVFCU. That's going to be any secondary market guidelines. It's a pretty standard in the mortgage industry too. So we will need those too. So just an FYI. In talking too about documentation and income, this is something that I've always run into since I've been in the business, 1998, 97. we do find some borrowers, that they don't work for a company. They may be self-employed or an independent contractor. We will need your tax returns, the most recent year or 2 years of tax returns, because we will need to look through those and qualify you based on the income reported on your tax returns. So that's something you want to be very aware of. We will need your business and personal, most cases, that we will need to verify. Reason being is because we have to be able to prove that you can pay back this loan and support the loans you have outstanding currently. So and that the regulations dictate that we do have to prove that. So don't be alarmed if we're going to be asking for a lot of personal financial information. It's something we do have to have to be able to support the loan. And there's something too about self-employed borrowers, Jessica. Can you just kind of tell everybody a little bit that you run into, what you find sometimes, and what they need to be looking out for if someone is an independent contractor or self-employed?
Yeah, so if you're self-employed, like Bryan said, we're going to need a 2-year history of that. We're going to need to see that on your tax returns for 2 years. But something else to keep in mind that when we're looking at income for self-employed, we go by the bottom line after the deductions and everything. And that's a big thing sometimes because we have to go by that bottom line, and usually that top line is quite a bit higher.
It's gross
So
income as opposed to net income. So
yes, so that's a big one when it comes to self-employed that we run into a lot.
yeah, and it's not just TVFCU. It's all. I have
No, it's
friends of mine that are competitors. We talk quite a bit, and it's just something that is standard in the mortgage industry. They're going to look at the net income after deductions, etc. I have relatives. My father was self-employed for many years. And part of being self-employed is you do get to write off several things that are business expenses, and it's all legal and everything. It's just that as far as counting income, we're going to have to look at the bottom line, the net income on that. So just everybody, please be aware of that. It's not because we're mean or anything. It's because that is what is required. It's pretty standard underwriting guidelines, Fannie Mae, Freddie Mac, etc. So. But that just be aware that when you are looking and budgeting and everything, we're going to have to prove that income too with documentation. So just be aware. Be aware. We qualify self-employed independent contractors all day long, all
all
day
day
long,
long.
all day long.
Hmm.
If we do run into an issue, say Jessica's looking at someone and their debt to income ratio is just a little bit too high and they can't get qualified, we'll work with you and see what we can do. I know in some
Hmm.
instances we have refinanced people's automotive loans to get their
Hmm.
payment down. So they can qualify. I had a gentleman not too long ago had a $850 car payment. However, he had had that car for a couple of years. It's pretty expensive. So we talked to one of our consumer lenders and a great originator over there, and he looked at it. He talked to the member and said, "Hey, I can refinance that, get your payment down, get your rate down." That was the main thing. His interest rate was kind of high, so I think we got that payment down to a little bit below $500, and we were able to qualify him. So that's something we're always looking out for that we can do. Sometimes they can also consolidate some of that debt and get those payments down, so to get you qualified. We have a lot of avenues here at TVFCU that we can utilize, especially that our competition may not have. So definitely want to talk to your originator. Please be honest with them and let them know, if you have things outstanding or something, just let us know. We're an advocate for you. We are trying to get your loan to closing. So talking to your originator and let them know. Okay. And when Jessica was talking about the processors are the ones that get that loan to the underwriter and get it cleared by the underwriter. The underwriter is the one that goes through your file with a fine-tooth comb. They may require additional documentation. So all that documentation that you gave Jessica up front, which there may be a lot of it, there may be additional documentation that may be needed. Because sometimes things come up within that initial documentation that may bring up questions and they may need more clarification on that too. Okay.
Which brings me to another thing about bank statements and things coming up. When you are talking to your originator about how much is in your accounts, make sure those funds are sourced funds. Make
Yes.
sure make sure you didn't make a $20,000 cash deposit last week. We cannot source cash. Seasoned funds have to sit in an account for 2 bank statements. we have to know that those funds, they're yours, they're not going anywhere, they're not from another type of loan or anything like that. So that's a big thing that we run into a lot. I'll say, where's your down payment and closing costs coming from? Oh, well, it's cash that I have here at home. Unfortunately, we cannot use that as down payment and closing cost. It has to be sourced funds in an account.
Yeah, it has to be seasoned because the way the underwriting looks at, and this is secondary market guidelines too, with Fannie Mae, Freddie Mac, FHA, whoever you deal with, they don't know where those funds came from. So that could be borrowed money from somebody down the street. So they do have to source these funds. Now, saying that though, if you're getting money from, say, your mom and dad or close relative to purchase a home, those are gift funds. Those can be used. But we do have to have a gift letter stating that that money doesn't have to be repaid. It is an actual gift. It is not a loan. So, and that's really big these days. Families giving down payment funds or closing cost funds. Those are known as gift funds, and those are allowed. There does have to be documentation in that. So, don't be transferring any of that money until you talk to your originator first. So, we don't want to move that money around just yet because we have to have paper trails and everything too. So, and cash especially. If there are cash deposits in your account, a lot of times those funds just can't be used. We have to use the source funds showing up too. So, which leads me to, and I've talked about this several times in some of our webinars, TVFCU does have a no down payment product. We call it our 100% product. So if you're buying a primary home, if you qualify, you don't have to put a down payment down. But that leads me to the next thing, closing costs. There are closing costs involved in loans, and there are two ways to pay for those closing costs. And Jessica, you'll tell everybody who are the two ways that pays for closing costs.
Either you or you ask the seller to.
Correct.
So those closing costs cannot be rolled into the loan. Either you have to pay those, or when you're negotiating with and your realtor's negotiating for you, you can ask the seller to pay them, and if they agree, they can.
Yeah, and it can be built in the purchase price too. That is something that if you have a realtor working with you and the seller has a realtor, that's something they're going to work out too. They're going to negotiate. Realtors, that's how they earn their pay. They negotiate for you. They are an advocate for you. If it's your realtor, if you're the buyer's realtor, you're your advocate. They're going to try to get you the best deal possible. They may even want to talk to your lender. They may want to talk to Jessica. Hey, call up Jessica. Hey, can the seller pay closing costs? How much can they pay? Sometimes there are limitations on what they can pay. Sometimes there are not. It depends on the loan program that you're in. So you want to make sure your realtor is talking to your lender if they need that information to negotiate too. I highly recommend that too. If you can get the seller to pay for your closing costs, that's great, but be aware that may be built into the purchase price too. So that also leads me to the next thing too. We were talking about appraisals, and this is a big deal that's been going on here for quite a while now. Appraisals are taking a long time in this area. In some larger urban areas, it's taking even longer. I know I heard last Nashville, a friend of mine in Nashville said 6 to 8 weeks to get an appraisal back. Chattanooga is not quite at that right now. We hope we will never be there. But just be aware when your realtor, and most of your realtors know this nowadays. I've talked to several. They know it's taking 3 to 4 weeks sometimes. So that's going to be built in your contract for your closing date too. Now we will do our very best to get that appraisal back as quickly as possible. However, sometimes out in the suburb or the more rural areas, it can be a little bit more of a challenge because there are appraisers. There aren't that many in those areas, and when we can find somebody, they're going to have to schedule and go out there, and they are very busy these days. Also, too, there are instances where we don't need an appraisal. Jessica, kind of tell a little bit about that. Where does that come up? If I'm purchasing a home and I'm not required to have an appraisal, how does that happen? What constitutes that?
So typically we have loans that we sell, and
I think we lost Jessica there for just a second. There
especially
you
if
are.
you're putting a large, we'll get. So I'm not sure where I cut off at, but basically we have loans that we sell, and sometimes we will get an appraisal waiver. That's typically if you're putting a large down payment or something like that down, it will say, we're not requiring an appraisal on this loan.
Correct. Correct. And in those instances too, that's going to be, through Fannie Mae or Freddie Mac or something like that. If you're
Hmm.
going through us, it's going to be Freddie Mac. But it's an appraisal waiver. They do not require it. We will not order one. And really, to qualify for that program, we have to stick with what the requirements are. And if you want one, we really won't need. We won't be going on that program. We'll have to get you on another program if you want to get an appraisal done. Which also leads me to my next thing. We've been doing this for quite a while, but TVFCU pays for your appraisal too. So that sets us apart from the competition. We don't ask for money up front to pay for the appraisal, where some of our competitors do. We do not do that. TVFCU will pay for your appraisal. So FYI. So one more reason to go with TVFCU for your mortgage needs. And that's going to be on refinances as well. Home equity lines of credit, land loans, you name it, we pay for the appraisal. So that's a special that we're running for 2021. We hope to have it for 2022, but if you're looking to buy 2021, go with us. We'd love to have you. Also, too, something else we're running into appraisal values. That is something that is becoming more and more of an issue in the mortgage industry. And again, I'm talking to my friends that are competitors. They're seeing it too, and so are the realtors seeing it too. Appraisals not coming in for the purchase price. People are selling homes for more than what they're worth a lot of times, hoping they find a cash buyer to pay for it. Just be aware that if you are financing a loan, either through TVFCU or another mortgage lender, the purchase price, the appraisal value has to match that. If it comes lower than the purchase price, your lender is going to have to use that lower value and base it off of that. And what happens is you're going to have to make up the difference if you really want that home. I don't recommend it, but some people, sometimes it's a little bit lower. They're going to take their chances. But I even saw one, and I talked to a friend of mine, $100,000 less on the appraisal value. Which that's just massive. So the borrower didn't go through with it. They didn't want to buy a home that is as they're upside down in the equity in it, especially that much. Homes are going up in value, but the appraisal values, the comparables aren't quite matching yet right now at this time. Just because there aren't a whole lot of homes selling right now because the market is limited on inventory. So be aware of that, please, and talk to your originator about that too, because that's something that you'll need to be aware of. If the appraisal comes back less, you're going to have to renegotiate with the seller, or you're going to have to make up the difference with your own funds, which again, as Jessica said, has to be verified funds, etc. So Jessica, once we get the appraisal back, everything's good. Appraisal came in great, looks good. Title work came back, and you keep saying title work. What is title work? Kind of explain that a little bit to everybody.
So we work with all of the local title companies and they will do title work. Basically, that's making sure that there are no outstanding liens or anything like that on the property that could come back to you. They're making sure that the legal description of the property matches up with everything. It's just making sure and it's protecting you to make sure this is your property. You're going to own it. You've got a clear title. You're starting with a clean slate.
Yeah, and TVFCU and any mortgage lender is going to require that as well, because we want to make sure that our lien is in first position and no encumbrances. There are no back taxes owed. There are no IRS liens. Any other type of liens that are on that property, those will have to be cleared up by the seller. If it's owed by the seller, hopefully when they purchased the home, they had a title search and their property was clear as far as any liens or encumbrances as well. We do run in some instances too. The title company may require a survey on the property. Don't see that quite as much as these past few years. I haven't, but I remember back in the late 90s, early 2000s, I did, especially in rural areas. The title companies, they couldn't. The surveys were done so long ago, maybe in the 1920s and 30s. And those surveys weren't quite as specific as they are now. So there may be some instances they may require a new survey, and it will definitely delay your closing, because surveyors, like everybody else, they're backed up. PERT test companies, they're backed up too. I think surveyors, last I heard, if you wanted a survey done, it was what, 4, 5, 6, 7, 8 weeks.
Oh, easily.
Easily. So just be aware of that too. But if it's going to be required, I would highly suggest, getting that survey because you want to make sure where your meets and bounds are and the lines are drawn and everything, and it's accurate. You don't want to be arguing with your neighbors later on about where you're going to put that fence. So,
Right. And
yeah,
I mean, I know that a lot of times we get in the process and you want in that house as soon as possible. We understand that. But at the same time, you need to think about in a year from now, you want to make sure you're protected.
correct, correct. Very, very important. So we got the title
Mhm.
work back. The only lien on the property was the seller's mortgage that they owe with
Mhm.
XYZ mortgage company. So got that. So it's gone to underwriting. The underwriter has all the final documentation. There is nothing left, and then we get a thing called I call it a CTC, clear to close. Those are magic
Mhm.
words to my or ears. Get that clear to close, and that means we can close the loan. It's fully approved. It's
Mhm.
ready to go. What happens after we get that clear to close? Kind of walk me through that process.
So once we have clear to close, your file goes to our closing department and they will work with the title company, the realtors, they will work with everyone to get the closing scheduled. Typically, if it's for a purchase, we're going to go by that date on the contract. So we will get the closing scheduled and then you have to get what's called your closing disclosure 3 days prior to closing. And what that is it's a document that's going to tell you exactly what you're going to need at closing. It's going to have all of your final numbers. It's going to have what all of the fees. In the beginning, we give an initial loan estimate, and it is just that it is an estimate. The closing disclosure is going to look very similar, but it's going to be the final fees, and that's what it is. That's the amount you're going to need to purchase the home or the land.
That'll be the exact dollar amount and everything. And the title
Mhm.
company in TVFC is going to let you know how to bring those funds to closing too. So
Mhm.
be aware of that. That CD, as we call it, closing disclosure, it's a legal document. It does have to be received by the borrower and signed at least 3 days prior to closing. If it
Mhm.
is not, then that closing will have to be moved back, possibly another
Mhm.
day. So do be aware of that, especially if you're working with TVFCU or even any other mortgage lender. Make sure you're receiving that closing disclosure within 3 days prior to. Now, the 3 days cannot count Sundays or federal holidays, so just an FYI on that too. So be
Mhm.
talking to your originator too, or loan officer assistant, or closer, or whoever you're talking to. Make sure when they say, and be aware too. This is part of your planning on the beginning, that it's going to be a process you're going to have to work through. If you're going to be on vacation, please let us know because
Let
we're
us know. Have access to email.
yes, yes, or some way we can get that closing disclosure to you so you can electronically sign it too. So very, very important. We reiterate and let everybody know, we're getting towards the end of that process. That CD is going to be coming to you. We need to get that in your hands so you can look at it, sign it. And the reason they do that 3 days prior to closing is that way if you have any questions or if anything needs to be changed, it can be done within that 3 day period. Okay.
Right.
So main thing is get in your hands, get it signed so you can meet that closing date. If you have any questions, talk to your originator and then we can work it out if we need to. Most times it's going to be accurate, no questions asked.
Mhm.
We work with our title companies. We're very good. TVSU has an excellent reputation with the title companies and getting documentation
Mhm.
to them. You won't be sitting at a closing table waiting for a loan package documents to get to your title company.
No.
That's pretty much never happens with TVFCU. So,
Mhm.
so anyway, that being said, so I've gone to closing, I've signed. I imagine congratulations. I'm a homeowner, correct?
Mhm.
I'm a
Right.
homeowner. Okay.
Yep.
So, and you do get copies of your documents that you sign. Um,
Mhm.
and then, if you have any questions, of course, let us know. Also, too, later on, let's say 6 months down the road, Jessica, I'm living in my house. It's great. I love it. The appraisal came back higher, and I'm thinking, man, I might want to do some home improvements. What can I do?
We have equity loans for that. We can take out, some of the equity in the home so that you are able to do improvements or, you know, big right now is everybody wants to put in a swimming pool. So you can take out some equity and you can have those funds for whatever you would like to improve on the property.
Yeah, yeah. That's something that you may want to be aware of. You may not want to do it as soon as that, but maybe later on down the road,
Yeah.
you may want to talk to someone or TVFCU here and see if you want to tap into some equity in the home. We'd be more than happy to talk to you and help you with that too. We do
Definitely.
refinances as well. If you did a loan, say 3 or 4 years ago and your rate may be a little bit higher, you definitely want to talk to us and see what we can do for you too. That's not part of the pre-qualification, but it is something that we do offer. And if you're a homeowner and you have a home, we'd like to talk to you to help you out with that too. So, all right. Well, we do thank you very much, everyone, for being with us. We have done the drawing. We had 139 people registered, and looks like we do have a winner for a $100 gift card. Natrina Johnson, you are the winner. We will be contacting you to get you that $100 Visa gift card. So congratulations, Katrina, and thank everybody for being in with us today. We also too, we're going to be having some more webinars coming up next month and previous or following months. So if anybody has any ideas or anything you want to hear about, please let us know. Reach out to me or Jessica. Jessica, if you'll give everybody your contact information.
Yeah, so you're more than welcome to call me, 423-634-3649, or my email address, it's jessica.parrish@tvfcu.com. Feel free to call me or email me with any questions that you may have.
And great.
Whether it be about pre-qualifications or anything else that we offer mortgage related.
Great. And also our basic contact information is right there at the top of your screen, 423-634-3667. You can reach us. Again, you can contact Bryan Fryar. I'm always available. If I don't answer the phone or anything, leave a voicemail. I will call you back. Okay. So again, appreciate everybody joining us today. Jessica, thank you for joining me. Had fun.
Thank you for having me.
So if anybody needs anything, please give us a shout. Everybody have a great weekend. Have a safe weekend, and we'll be seeing you soon. Take care.